Welcome to Mechanical Markets. Today we are going in depth into McDonald's. Where does McDonald's find themselves late 2024 in regards to the news surrounding the company and the financial aspects going forth into 2025? In this video, we will be diving into exactly that to allow us to see whether McDonald's is a stable investment for the future. Jumping straight into this, I've just seen an article from NBC News stating that there has been McDonald's E. coli outbreaks within the United States. This has unfortunately resulted in total cases being at 75 people, hospitalizations at 22, and very unfortunately, one death has been recorded. However, it is very important to note that McDonald's is not solely at fault for this E. coli breakout as stated here.
A likely source of this E. coli outbreak that's now sickened 75 people across 13 states. This after the Colorado Department of Agriculture yesterday announced they've tested fresh and frozen beef patties from across that state, which is home to dozens of these cases, and said all of those tests on the beef came back negative for E. coli. So as a result, McDonald's now almost entirely shifting its focus to California-based onion supplier Taylor Farms, who said in a statement on Friday they're saddened by the outbreak and have issued a preemptive recall. So in the midst of all of this, as you said, McDonald's, after pulling the quarter pounder from the menu, now says it's bringing it back nationwide, noting it will just for now be served without onions in several states.
All this, of course, is now leading to huge lawsuits in McDonald's direction, with alleged 33 families coming forward to sue McDonald's themselves. This, of course, following the apology of the CEO currently in charge of McDonald's regarding the whole situation. Furthermore, to further damage McDonald's current reputation, there is a huge boycott still ongoing regarding McDonald's status within Israel, with McDonald's buying back a lot of its Israeli restaurants after sales suffered from a boycott over the brand use within Israel's fast food market. This following after the fast food giant was criticized after its Israeli franchise was found to be giving away thousands of free meals to Israeli soldiers. This boycott was a massive decrease in McDonald's profits regarding the restaurants around the Middle Eastern area of the world. While this only makes up around 5% of the total McDonald's restaurants worldwide, this still has a massive impact on the net profit. Another problem that McDonald's find themselves facing is the increase on average of 141.4% across the last 5 years with regards to their inflation of food prices. This in turn drives away a lot of McDonald's customers as their brand becomes less of a affordable luxury and more of a unnecessary spend. McDonald's is, however, trying to combat this with a £5 meal deal within the UK and Ireland, and I believe they're doing something very similar within the States. However, McDonald's are not the only people to be doing this, as KFC and I believe Burger King are also matching this trend, therefore meaning that McDonald's has no sort of USP in this regard. Steering away from news regarding McDonald's and moving in towards their financial statements, I've conducted a quick liquidity equation, this being a ratio of how much liquid cash they have compared to their total current debt. This is a 3-year chart starting in 2021 and ending in 2023. Starting with 2021, we can see a ratio of 0.095, 22 is 0.053, and 2023 is 0.086. This is really not good for McDonald's, as this essentially means that for every dollar of debt they owe, they don't even have 10 cents to pay this back in liquid cash. Finally, some positive news for McDonald's. This is a retention rate. This essentially divides the net income divided by the total revenue, timesing it by 100 to make a percentage. This is a 2024 quarterly graph. So essentially for Q1 of this year, they are at a 31.26% retention rate. Q2 it is 57.93%, and the trailing 12 months is 32.24%. This is super strong for them, as you tend to want to see a stock have a 10% retention rate. However, within Q2 they nearly pushed on to 60%, and the trailing 12 months being at 32 proves that this is a very stable figure, and it has potential to even rise due to Q2 being so high. And finally, looking at the free cash flow for McDonald's, this is very strong, as it is relatively increasing year on year, and is, if it's not increasing, it's very stable. However, this is still not as strong as you want to see it, as free cash flow is often used for stock buybacks, paying out dividends, or even paying out debt, which McDonald's has an awful lot of. While this free cash flow is very high, this is nowhere near the figure in which their debt is currently at. So where are they finding the money to pay this debt out of? I don't know. Is it possible for them to even pay their debt back easily? I'm really not entirely sure where they're pulling this money out of to pay back their current debt. McDonald's has a relatively strong PE ratio of 25.96. PE ratio is essentially price to earnings, which you can gauge whether this stock is overpriced or not. Generally speaking, a positive PE ratio means that the stock is seen as being undervalued, and if the PE ratio is negative, the stock is overvalued. However, this is more of a speculation thing, as it goes off of the investors' thoughts essentially. So it's to be taken with a pinch of salt, but I believe that a PE ratio of 25.96 is relatively realistic. With McDonald's being down 0.28% in the year-to-date chart, it does show that it might have almost peaked, this stock, especially with the boycotts, lawsuits involved with McDonald's at the moment, and of course inflation hurting them badly. It's hard to say where McDonald's stock is going to go in the future. So for that reason, I give McDonald's this is due to many factors regarding the news surrounding McDonald's. I really don't see the stock going much further within 2025, as no matter what they seem to do, there's always bad press surrounding them, and always some sort of element of inflation hurting them badly. The only reason why I would recommend McDonald's is for their dividend payout. With this being at 2.42%, this is a relatively strong dividend payout. However, it might start to drop soon, with their free cash flow mostly being used to pay down debt potentially. It's really hard to see any reason as to why. I mean, personally, I won't be investing in McDonald's, so I can't see why it's going to be on anyone's list at the moment. Who knows though, with the next Q4 or even Q3 earnings coming up soon, this stock could turn around, but personally, I don't see it. So that is it for this video, breaking down the stock of McDonald's. Hopefully you now have a better understanding on where this stock is potentially heading in the future. I hope this video has been useful for you. If it has, please be sure to leave a like and potentially even subscribe, and I'll see you for the next one.